Good evening, Map here, Map Investments, bringing you another stock market and economic video. Today the news was bad. We'll come back to the futures, but basically today we had retail sales were down, which is about 70% of of our economy is based on consumption. Unfortunately, I think these people want me to become a member. Let me see what article I can pick up here. Holiday sales fall short of expectations, set stage for tougher 23 for retailers. This was today. Let's see what it says here. Key points: holiday sales came in below industry expectation as shoppers felt pinched by inflation and rising interest rates. Sales during November and December grew 5.3 year over year to 936 billion, below the NRF's prediction. The gains include the impact of inflation, to which drives up total sales. Holiday sales came in below industry expectation as shoppers felt pinched by inflation and rising interest rates. Repeated that. Below the major trade group's prediction for growth of between 6 and 8% over the year. The retail number excludes spending at automobile dealers, which also have been getting pinched, as you can see with CarMax stock, Carvana stock, and all the automotive stocks, gasoline stations, and restaurants, and is based on data from the U.S. Census Bureau. It covers the period from November 1st to December 31st. The holiday sale gains include the impact of inflation, which drives up total sales. The Consumer Price Index, which measures the cost of broad mix of goods and services, was up 6.5% in December compared with a year ago, according to Labor Department. For retailers, shopping season's results reflect the challenges ahead as Americans continue to pay higher prices for groceries, housing, and more. Month after month, they are racking up credit card balances, spending down savings, having fewer dollars for discretionary spending. Plus, retailers are following years of extraordinary spending during the COVID pandemic. Americans fought boredom and used stimulus checks by buying lingerie, throw pillows, kitchen supplies, home theater systems, and more. That translated into sharp year-over-year jumps in retail sales in the past two holiday seasons, a 14 gain in 21 and 8.3 gain in 20. On average, holiday sales have grown about 4.9% annually over the past decade, according to NRF. The chief executive, Matt Shea, said those upward leaps were unsustainable, especially as people return to commuting, going out to dinner, and booking vacations again. Could be true in regards to airfare, because the airlines have been reporting pretty good. American and United reported pretty decent. Delta, so. Prices, rents are to more expensive groceries. It just seems that consumers continue to be cost conscious. Shea told CNBC they're feeling it. They are aware of the pressures of managing their daily, weekly, monthly expenses. Sales rose in most major retail categories during the holiday season. Online and non-store sales saw the biggest year-over-year gains, jumping 9.5% during the holiday season. Sales at groceries and beverage stores, which have had significant price increases, rose 7.8% versus the year ago period. Demand in some categories noticeably weakened. Sales at furniture and home furnishing stores declined by 1.1%. I was actually short Wayfair. I still am, I think. I put that trade in, I don't know if it was this week. I didn't do a video yesterday. I think I did one Monday. And sales at electronics and appliance stores dropped 5.7% year over year. So electronics and appliances down big. Shea said the year ahead, retailers will have to work harder to attract and retain customers There's a premium on execution. He said everyone will not be a winner in an environment in which consumers are more selective. So we had that in regards to retail sales. So retail sales in December slumped as Americans braced for slower economy. We also had the Empire, this was yesterday, which I didn't do a video, state index. I'm not even going to go to Market Watch. Market Watch probably going to want me to become a member. Or maybe not. So this was yesterday. New York Empire State Factory gauge drops sharply in January, signaling deep contraction in activity. Headline index falls to negative 32.9, the lowest since the worst of the pandemic. The numbers, the New York Fed's Empire State Business Condition Index, a gauge of manufacturing activity in the state, tumbled 21.7 points to a negative 32.9 in January, the regional Fed bank said Tuesday. This is the lowest level since the worst of the pandemic in May of 20, and among the lowest levels in survey's history, the regional Fed bank said. So not only are we in a recession, but our economy is falling off a cliff. Economists had expected a reading of -7, according to a survey by the Wall Street Journal. Any reading below 0 indicates contraction. Key details. The new orders index fell 27.5 points to a negative 31.1 in January. Shipments fell 27.7 points to a negative 22.4. The index for prices paid and prices received moved lower. Employment gauges were also weak. Firms expect little improvement in coming months, with futures index at 8. Big picture. The Federal Reserve's steady increase in interest rates is having a slowing impact on capital spending as firms are scaling back investments, economists said. Demand for goods is also slowing after 2 strong years on the weak global economy. Added, the mix is strong dollar, which makes U.S. exports more expensive. The market pays attention to the Empire State Index because it is seen as an early read on national ISM manufacturing index to be released early next month. The ISM factory index contracted in December for the second straight month, falling to 48.4 from 49. And then we have Chris Williamson plunging New York's Fed's manufacturing survey in January sets a grim tone for the start of the year youth production and bodes ill for the S&P Global PMI. Looking ahead, manufacturing conditions in U.S. are deteriorating and the worst is likely ahead, said Gurleen Chadha, economist, Oxford Economics. And this was yesterday's news. We had retail, and let's just go to CNBC. This might be a little bit longer video because we had big gyrations in the market today. Apple's the only tech giant that hasn't announced layoffs. This may be why. We had, so going to layoffs. So we had Microsoft layoff. They laid off 10,000 employees to trim its cost. So it's happening all over the place. We also had CRM lay off a bunch of employees. CRM, I think, did 8,000. Salesforce, I think it was 8,000. Amazon did 8,000. So the layoffs are coming in the tech sector pretty strong. Money markets hit record levels, and now investors have lots of firepower to buy. Stock futures are flat. We'll take a look at the futures. I said this video will be a little bit longer, but it'll be a good video because we are heading into a recession. I don't think this is a soft landing. This is gonna get tough. I've been saying it in the videos. The dollar is gonna roll over. I think it was holding the 102 mark. You got to be in precious metals. You got to protect your purchasing power. It's not a get rich deal, but I think the Fed is trapped, and the only thing they can do is print money. The government's debt ceiling is, I think, hits today or tomorrow. They got to just keep ballooning the debt, inflating the money supply into infinity, because we're never going to repay this money back. It's just not feasible, and this is going to just destroy the dollar, and the next crisis is going to be a monetary crisis, a money crisis, a dollar crisis. So you got to you got to protect yourself. Gold, silver, you got to be in stocks that are like commodity related, in the food, in the ag space, in miners. And that's my 2 cents on that. We'll continue to read the news here. Disneyland Peltz lack of media experience. We've already talked about Nelson Peltz. He's worth about a little bit over $1 billion. I don't know why he's messing with Disney, but whatever. The Ukraine war is still going on, and Russia says they will win the war. I think that's what they were saying today in one of the global headlines. Amazon, Microsoft, tech company have laid off more than 60,000 workers. Kramer says market consolidation period is shedding weak-handed investors. Let's see what else. Consumers are going to trade down in 23. I mean, I'm watching my expenses to a T, and I would do that if I were you. I'm trying to just cut all the fat off the bone. I mean, there's really not much I can do now. I'm just trying to work on my YouTube channel, get the word out there, help fellow subscribers and investors, keep my eye on the market, put trades on, and be successful, and collect dividend as well as I wait, and just keep trying to do all the side hustles and do good in my job as well. What else we got here? I thought there was another headline news. I guess those were the biggest ones. Man, everything is Club Pro. Like, you can't even read an article anymore. You got to become a member. Yeah, everybody wants their money. Look at all these articles. You can't even look at them. You could just look at the headlines. It's pretty funny. So, all right. So let's take a look at the futures. So the futures, let's pull them up. Now, I've been having a great year so far. I have had a setback Monday and today. Today I did beat the indexes with my futures. Here will say I'm down 1.15% on the day, but I actually wasn't. I was actually down 0.85% on about 30 trades. I had 30 trades because I kept my long futures. I kept my long futures, which are short. Let's take a look at the futures. Now, the 10-year is at 3.39. I think this is overdone, and I think this 10-year yield has to go much higher. Inflation is not going away, folks. Inflation is in food and in energy, and it is not going away. When you go to the store and you look at things, everything is priced astronomically. Sure, prices of cars have come down, but the interest rates on these cars are still high. The Fed still has a 5% target, and the 10-year rate is at 3.40. Somebody's wrong. And I think that interest rates have to go higher, and eventually they will. So I'm long the 10-year, pretty much where it's at. The dollar, let's see what the dollar is doing right now. Last I checked, it was hovering 102, 102.38. Low, well, it just opened. So maybe we could pull up the chart here for the day, intraday, and we'll look at the 15-minute chart. And the low was 101.52, 101.52, and it bounced back to 102.50 almost. And that's where we're at right now. Foreign currencies mixed. And the way I battle a lower dollar is not in foreign currencies, because I think all these central banks are in cahoots to just print money and fulfill their end game, which is to own it all and buy real assets with these dollars that they print or currencies they print out of thin air. Gold is holding the 1905 last I saw mark, 1907, very strong. Gold was firm at 1905 and didn't want to go under 1900. Bitcoin down, I think it was down today in the regular session about 800. I'm short that crap. Through micros. Oil came down some too at 79 right now. Still like the whole energy sector via whatever you want to play it through futures, options, ETFs, dividend paying stocks. The fundamentals are strong in the oil sector with reserves being at 40-year lows. The S&P is down 5. And I think we will continue to get a sell-off. We'll take a look at the stock chart and kind of get a gauge how those charts look. Copper has pretty remarkable, the copper at 425 almost, with recession ahead. Usually Dr. Copper is a recession indicator, but it's hanging in there. I don't know how, but it is. I have no position. Lean hogs 77, feeders and live cattle have been pretty firm at their levels, and you can see the prices at the store. Small caps 1862, pretty flat in the after hours. Nasdaq down 20 to 11456. Dow Jones 33,350 down 36. Natural gas, another one that mind boggles me at 330. Now, big component in fertilizers for agricultural is natural gas. So if natural gas prices are down, these companies like Monsanto, CF, and I don't know if it's NTR or NRT, one of the two, backwards. Sometimes I get it wrong. I want to say it's NTR. NTR. It is Nutrien. Those three, and maybe Bunge, BG, are good ag fertilizer plays. Take a look at them. I like Mosaic, but take a look at all of them. They're all decent plays. Palladium and platinum, 1,700 for the palladium. Platinum hovering at about that 1,000 mark. What else do we got? Oh, good. The grains are open. We can see how they open. Now, silver was down to 23.50. A little disappointed on the silver action. It's all right. Silver will have its day in the sunshine. VIX up to 21.75, and we have they did hit the soybeans hard today, but I think they will bounce back along with corn. And wheat is 738, but I think corn is the strongest out of all of them, and then soybeans, then wheat, and that is the futures. Now on the stock front. Early in the morning, I looked at my account and I said, okay, I have a lot of winners on the board. I have a good month so far. And I didn't like the news that I heard on the retail sales and the Empire State news yesterday. And I started looking at it. I saw the dollar wasn't doing much, actually went down. And I saw the 10-year, people rushing into the bonds. And I was like, this is going to be a sell-off. So I liquidated a lot of my winners because we also, a couple reasons why. We have earnings around the corner. So we got a lot of earnings coming up. And second, I've already collected dividends on these. So I'm just looking for dividend now. And I stayed in some that have dividends. So we'll take a look here. In one account, I sold my Scott Miracle-Gro. There's no dividend coming up, and earnings is around the corner. And I sold my Smith & Wesson. Earnings are around the corner as well. No dividend. I collected on Huntington Bank, got rid of it. Annaly, got rid of it. VFC, got rid of it. BGS, got rid of it. Now I got all these. Jeez, sorry with all the text. I sold all these for winners. Cracker Barrel winner, Intel, Seagate, USB, Medtronics, Verizon, Mosaic. I closed that put for 50%. Cisco, Annaly, Western Union. I actually bought Clorox today because the dividend's coming. Even though I'm down a little bit on it, I bought it today at 145. I'm down some, but I'm gonna collect the dividend, and it's a defensive stock. I bought more Canagra. They had good earnings. I bought more Pfizer. I bought more Calmaine. They make eggs. I closed my Celsius short for a winner, Starbucks short for a winner, bought more Hasbro. I added more UNG, which is natural gas, put credit spreads as for it to go back up. Newmont, I closed for a winner. KHC, I sold a put. And in Walgreens, I sold a put as well. I don't mind owning those stocks. I bought more 10-year yield to go up. I filled the put credit spread in Deere and in AbbVie Pharmaceutical. And that was my day trading today. Up nicely for the year so far, being defensive, looking for yield, looking for the right opportunities. I do have, going back into the overview, as you can see here, I still have my short in the micros up 300, and my Nasdaq 304, my Bitcoin up 25, and then the rest are zeros because they were closed out, P&L and open. Pretty much it on that. So yeah, that's pretty much all that I have today. Retail sales are abysmal. The economy is, I don't think it's doing well. Let's go to the chat room, see if there's any global news that came out. Yeah, it's not looking good. Amazon, 23 employees in Washington received notice under WARN Act on job cuts. Yeah, I mean, I guess the Fed is doing their job. Fed Logan voter says we have seen some better data on inflation, but would want to see a lot more, so our confidence of shifting inflation trend would also want to see easing in labor markets to be confident in inflation trend. I mean, I think the last report, inflation was 7, I want to say, and they got rates at what, 4.25. I mean, you got to be over, if you want to bring inflation, you got to be over the inflation rate. Fed hawker voter says seeing mounting evidence of slowing economy. Really? I mean, have you guys seen the prices of eggs? I got 5 dozen of eggs at BJ's for $24. That is insane. That is just ludicrous. Food is through the roof. That's why I'm telling you, look at some of these food companies. Actually, let's take a look at my dividend watch list. I think you guys would appreciate that to kind of get a scope of what I'm looking at. Let's start by the top. So Seagate hung in there today. I got rid of it because they got earnings coming out, and I got in at 53. I sold it like almost at 60 today, and I got out of it. NFC did good. Zoetis did okay. Not a lot of green today. Pretty flat, most of these. Let's look at the biggest losers. Seaboard, I got into Deere with a put credit spread. PNC destroyed. Clorox hit pretty hard. I got in there. Caterpillar, Bungie is a fertilizer play. Kraft Heinz got hit hard. Camping World down 2. Hormel hit pretty hard. Canagra hit pretty hard. Hasbro hit okay. I think they got earnings soon. Philip Morris came back a little bit because it was down more than that. Eggs down $1. Verizon down 88. That one's come down some. So yeah. So those are the dividend paying stocks. I don't want to keep on with the video. It's been pretty long, but stay defensive. Look for those dividends. Keep watching the channel. Comment, like, subscribe for those notifications when I do videos. Thank you to all subscribers. Stay safe out there. Have a good night, and chime in on any news or anything you see out there, or any trade ideas or company ideas. I would be grateful. Have a good night. Stay safe. God bless. Bye bye.